So in this video, we're going to talk about using the 3 exponential moving average cross signal to trade stocks. And we all know that moving averages are lagging technical indicators, but they are useful tools to help people frame the market. I think that moving averages, they're specifically really good at smoothing out the constant gyrations of price. So in addition to that, they actually provide an average value that can be used as a reference point when making trading decisions about buying or selling. So instead of just buying and selling at any price level on the price charts, if you use the techniques that we're going to talk about, it can help you focus your attention on one particular zone of price and direction. And after that, you can use various basic price patterns to determine when or if you want to trade. Now, speaking of price patterns, one of our most downloaded free guides to price patterns, still available. It can be downloaded by clicking the link above or the one below in the description. So why are we going to use 3 EMAs? Listen, moving averages, they're not particularly special, right? Regardless of what some people are going to tell you, but they can actually form the basis of a trading strategy for stocks that actually works. Moving average trading systems, they can be used to create so many different kinds of trading strategies, but they're not necessarily the best for every single situation. So as long as you understand what each type of trading strategy does and how it works, you really should have no problem creating your own system that fits your needs perfectly. Now, the 3 moving averages, they're going to give us 3 important pieces of information. It's going to show us the longer term direction of the market and whether we're currently in an uptrend or a downtrend, and if it's a strong trend. For that, we're going to use the 50 EMA. We can also see the direction of short-term momentum, the 10 EMA, and then we can have an area to look at to trade from, which is the 30 EMA. So we can use short-term trends to determine whether we're going to go long or short a stock against the main trend. And this is known as counter trend trading. And if you know price exhaustion types of patterns, it's a pretty viable strategy. And for that, we would just use a crossover of the 10 and the 30 EMA. So moving averages, they're going to give us an objective way to trade stocks without relying too much on your own personal opinion. They're going to allow us to have set rules in our trading plan. And that's going to give us consistency in our trading, but only when we follow it. Now, we could just simply use the 3 EMAs to create a moving average crossover strategy. But if you decide to take a position based only on a cross of any moving average in the direction of the current trend, you got to expect a large number of false signals, right? Because the averages are just going to whipsaw around the price at times. But we can do a heck of a lot better than that. So we can look at how the moving averages are lined up to give us an idea of a stock and if it's worth trading. So when you see indicators all jumbled together, consider the stock to be in transition. Don't trade it. Wait for better conditions. When the faster moving average starts pulling away from the rest of them, in this case it's the 10 EMA, we're going to start thinking that momentum is showing up. If price is heading towards the 30 EMA in a pullback, we want to be on alert for potential price reversals back in the direction of the 50 EMA. So we can't ignore price structure. Okay? You got to be aware of any support or resistance levels that are close to where you're trading at. So let's talk about buying stocks. So if you want to buy a certain stock, here are the steps you're going to want to do. You want to look for stocks that are in an uptrend, where the 50 EMA is below all of the average and it's rising. Wait for that 10 EMA to cross above the 30. You want to look for a retest of the 30. We're going to look for a reversal in price. We're going to enter the trade, set protective stop losses. So in this chart here, you can see all the variables have lined up for a trading setup. Price pulled back into our setup zone. And you know what? Even if price breaks the 50 EMA a little bit, the setup is still valid, right? You should know what trending price structure looks like. And as long as we don't start making lower highs and lower lows, our uptrend is still playable. So now we have a setup, price pulls into our zone, but we need a trigger to get us into a trade. There are a lot of ways to do this, right? There's a ton. Some of them include just looking at lower time frames. So in our example, we have a small consolidation, and a breakout of that could be a simple entry. So if we use a lower time frame, such as a 1-hour chart, we can use the break of a swing high and a cross of a 10-30 EMA combo for our strategy and trigger. So you could also use range breakouts, you can use trendline breaks, or just look for a simple reversal candlestick for a trigger. But what's important is that you have a trade trigger and you consistently use it. Don't keep changing it around. So here, this daily chart meets our setup criteria, but we are missing any sort of trigger into a long trade. Now, one thing you got to be mindful of is momentum during the decline of price. Now, this could simply be the last gasp of shorts, sellers, right? It could also be the makings of a new downtrend. We don't really know. So if you're watching this ticker and it's ENFN, you're going to want to see price begin to stall around this zone. When it does that, look for a trade trigger to get you long. Now, we got to set stops, right? There's a lot of different ways of doing that as well. You can use an ATR stop loss. You can use just placing your stop under a swing low. You can use the closest support zone for your stop. And these are all viable approaches. So in our first trade, simply putting your stop loss just a little bit under the low of the consolidation, totally viable approach for a price pattern trade entry that's like this one. Because we don't expect, once a breakout occurs to the upside, we don't really expect to see price heading back under the lows of the range. If it does, it's a failure. Okay, we want to be out of the trade anyways. We got to take profits. And when we use moving averages, there's a few different ways we can take profits. One way, set a profit target at a certain level above the entry price. So you could take that amount that you're risking and look to take 2 to 3 times that in profits. Another way, just let the trade run until price moves below the moving averages. This signals that the trend's reversed. It's time to exit the trade. You can use a 10 EMA for a partial scale out, the 30 EMA break for a full position exit. You could use a break and a close under the 10 EMA for more of a scalping exit. A close under the 30 EMA is more of a swing exit, and a close under the 50 would end your position. You could even use the moving averages as points to scale out of your position. But one warning, if you're using closing prices for exit, it can, has, and will happen where a very large momentum candle heads to the downside, breaks all the averages in one day. If you wait for the close, and depending on the context of the trade, your winner can easily become a loser. Okay, there's no one way of doing things, right? The bottom line is what suits you as a trader. This is a simple strategy, right? Simple works. We want to use it to trade stocks in an uptrend. By waiting for that 10 EMA to cross above the 30, we can be confident that the momentum, at least right now, is to the upside. Look to trade a pullback, a bull flag. It's just taking advantage of a pause in the price action, setting your stops under the low of the pullback, and then taking profits at 2 times your risk. It's a simple approach for you to start with and start testing. So to learn how to short stocks using options for even more trading opportunities, make sure you download our free options trading guide. Anyways, that's it. Like this video, hit like, subscribe. Any questions or comments, pop them below. We'll talk to you soon.